Hello, everybody. Welcome back to the Schaefer Stock Market Podcast. This is Josh Selway talking to you again. I'm an editor at Schaefer's Investment Research, and I'm so sorry we missed last week's podcast. Couldn't get it out. It was a busy week, but we're here today. So I'm here to make it up for you guys. Got a few stories I want to talk about, some things we are looking at and covering over on schaefersresearch.com. But before I get into all that, I just want to remind you that you can check out Schaefer's on Twitter and StockTwits, over on Facebook and on Instagram as well. We are posting regularly the things that we are covering on the site and some of the data that we are looking at. So make sure to check us out on there. I am on Twitter at Selway151 if you want to follow me on there. But let's just jump right into some of the stories that we've looked at this week over at schaefersresearch.com. And the first one I want to talk about is this breakout in Boeing. Breakout as in more of a recovery in Boeing. Of course, we had earlier in the year these terrible 737 MAX crashes and all the drama that ensued with those. But lately, Boeing stock has been rallying. Today, it's up another 3% on its way for a third straight day of strong gains. Just yesterday, Reuters reported the company is planning to resume manufacturing that 737 MAX jet in February of 2020. So this comes after, of course, they grounded those jets to make sure that they understood what was going wrong with them, make sure they got all the bugs figured out. But Boeing stock has been coming back here, and then this has generated a lot of buzz in the option pits, a lot of accelerated trading activity. We had weekly options that were popular, a lot of call trading. Calls were actually doubling puts in Thursday's trading during this big move for Boeing. So traders betting on more gains ahead, at least in the short term, for Boeing stock. But if we look more broadly, this is a sharp shift in sentiment among Boeing options traders. One of our internal indicators here, the Schaefer's put call open interest ratio, or what we call the SWOR, that was showing a put skewed reading, meaning options traders that are targeting contracts that expire within 3 months, which we classify as short term, those options traders had much more put open interest than call open interest. And that reading for that indicator actually ranked in the 90th annual percentile, which tells us that Boeing's short-term options traders are much more interested in puts right now than normal. And actually, the September 300 put is home to peak open interest on Boeing. So a lot of options traders had been betting on more weakness out of Boeing, but right now Boeing stock is starting to rally. As I said, up another 3% today. 300%. Yeah, that'd be nice. But that puts the stock at around $365 per share. So those September 300 puts, if they were bought to open, which the data seems to suggest that they were bought to open, those bets are not looking good right now. All right, the next story I want to talk about is one that I'm very excited about because it involves a few of my favorite things. First, one of my favorite movies of all time, The Big Short, and this involves Christian Bale's character, Michael Berry, who his hedge fund just took a position in GameStop, ticker GME. GameStop, we've talked about video games a lot on here, video game stocks, and GameStop has come up a few times, and that's because the shares have been absolutely obliterated over the past year. They've been driven all the way down to penny stock territory. Just in the past year, they've gone from around $17 all the way down to below $4 per share. They haven't traded above the 50-day moving average since January. But Michael Berry's hedge fund has taken a stake in GameStop here, and this is through his hedge fund. I believe it's Skion, I'm not sure of how you pronounce it exactly, but asset management here took a 3.3% stake in GameStop. The company's buying back shares, Barry noted, and that the retailer's balance sheet to him checks out and that the shares should be moving higher given the company's cash flow right now. So it'll be interesting to see here how GameStop reacts. As I said, the stock is all the way down below $4 per share, and it's given back some of those gains today that it just saw earlier in the week from this news. And option shares have actually come through, and they were selling calls on this news, betting on a ceiling right now at the 4 strike, anticipating GameStop to hold below the $4 level, which it is right now. Another name that I wanted to touch on here, especially because it's been really popular among options traders on a relative basis. Open interest is very high on this stock, and this is Solar Edge Technologies, ticker SEDG. This stock fell earlier this week after the solar company CEO took a medical leave of absence, and UBS downgraded the shares to neutral from buy, saying it expects global solar installations to peak over the next year. This comes after Solar Edge has been a huge winner in 2019. It's more than doubled in value. At the time of our writing for this article earlier in the week, it was up roughly 150% year to date. Trading near all-time highs. Just earlier this month, the company gave a strong earnings update, a solid outlook. So this is interesting to see this pullback come now. Of course, with the CEO leave of absence, that's not something you can really anticipate. But options traders had been picking up puts, suggesting that some of them shareholders may have been using put options to hedge and protect those paper profits that they have enjoyed so far this year. But there certainly is some negativity around Solar Edge, and that's most notable in the short interest space. Short sellers right now control about 7 days worth of buying power. That's if we go by the average trading volumes. So there is notable short interest there from Solar Edge, but that stock still, even with the recent pullback, has a strong year-to-date lead. All right, there are also 3 software stocks that we just covered that analysts are liking right now. And I'm going to start with ServiceNow, ticker NOW. Stifel earlier in the week upgraded this stock to buy from hold, set a $320 price target, which you can compare to the security's current price of around $273 per share. But ServiceNow, according to Stifel, is offering an attractive entry point. The brokerage firm noted that the stock has exploded since its 2012 IPO, returning almost 1,300% to investors since then. And this recent pullback in the stock doesn't really make sense to them, given that their internal checks show no slowdown in the company's businesses, and that it should continue to have success and grow thanks to some newer products that it's been releasing. Another software stock that just got bullish analyst attention, Workday, ticker WDAY. That stock popped higher thanks to Mizuho Securities, which initiated coverage with a buy rating and $225 price target. That's compared to the stock's current price of around $199 per share. Workday, according to Mizuho here, said that the company's cloud platform and Prism Analytics products could be a game changer and potentially could become $1 billion businesses with them themselves. The stock has pulled back in recent weeks along with its sector peers, but options traders have moved in to bet bullishly, with call buying picking up in a big way on Workday. And the last one I want to mention here is CyberArk Software, ticker CYBR. Cohen came in, began coverage with an outperform rating, a $145 price target. CyberArk right now is trading near $120 per share. And its chart, all these charts for these 3 stocks that I just mentioned are all very similar this year. Strong starts to the year, and then in recent weeks they've pulled back. So these analysts are really looking at these pullbacks as entry points for these software stocks, which, of course, software stocks have been some of the best performers over the past year, really driving gains in the tech space. So here are 3 names right now that analysts are calling out that could revisit fresh highs in the coming weeks and months, according to these brokerage firms. A few names here out of the healthcare space. These are names I like to give when there's news like this, just to give people a starting point of where to look. I highly recommend anyone who's looking to invest or trade in the healthcare space, you really have to do your homework on this sector in particular, because there's so many details, so much to consider all the drugs and pipelines these companies have, and a lot of them trade together. There's also outside forces that come in for the healthcare sector as well that play into these a lot. So I just like to give a few details and names to watch that we've been covering so people can do more homework on their own. One of the biggest names we covered, though, was AbbVie, ticker ABBV. That is the Humira parent who earlier this year bought Allergan, but we had a bullish brokerage note come in here from Piper Jaffray, who upgraded the stock to overweight from neutral and set an $80 price target. Right now, AbbVie is trading around $68 per share, so some upside there, according to Piper Jaffray. And what that brokerage firm is looking at here for AbbVie is that it's 2 drug releases that should be coming up here that it thinks can help bolster the company and offset any weakness from Humira, which some are worried could slow down, and that's why AbbVie is trying to expand its offerings due to it doesn't want to rely too heavily on Humira, which is one of the best-selling drugs in the world. A few names here that moved on FDA updates. We have Sarepta Therapeutics, ticker SRPT. That stock got crushed earlier this week after the Food and Drug Administration declined to approve a treatment for Duchenne muscular dystrophy, or DMD for short. And Sarepta's CEO said that the company was very surprised by the FDA rejection, and they're going to keep moving forward here to try to figure out a path forward for that treatment. But that news sparked a number of bear notes for Sarepta, which that stock is now trading at 52-week lows. The FDA also weighed in on Nabriva Therapeutics, ticker NBRV. The FDA came in and approved that company's pneumonia antibiotic earlier this week. That sent that stock rallying. And Moderna, ticker mRNA, the FDA gave that company's Zika virus vaccine fast track status. So that's always a big update from the FDA. And that stock went higher on that news as well. And just 2 more names here from the healthcare space that people may not be aware of and might want to check out. We have Myovant Sciences, ticker MYOV. That stock was in focus earlier this week after SVB Leerink, a brokerage firm, began coverage with an outperform rating and a $26 price target, which was triple the close from last Friday. They began this coverage on Monday, so huge upside potential there that they see for that stock. And then H.C. Wainwright began coverage on Nucana, ticker NCNA, with a buy rating and a $20 price target, which that stock was trading at around $7 when H.C. Wainwright started coverage there. So those are 2 smaller cap healthcare stocks that analysts see huge upside for. All right, we're going to close this out with an interesting trade on the oil front here, an options trade on the oil ETF USO. We had an options trader come in here and initiate what looks like a long straddle, potentially looking to profit from huge moves out of the oil space, betting it through USO. So you can find the details of this trade over on schaefersresearch.com. The title of this blog post was Options Trader Makes 7-Figure Bet on Oil Breakout. So essentially what this trader is doing, they bet almost $5.8 million up front, looking for USO to rally above $13.43 before these contracts expire in January, or they could profit if on a move below $9.57 per share. Those are the 2 break-even levels for that trade. You can go read more of the details again on that article on the site. We have a chart that breaks down those levels and how that trade could play out for that speculator. And of course, I always recommend anyone who's interested in options trading or investing in general, or any of the things we're looking at here at Schaefer's Research. Again, we are contrarian traders that try to play off sentiment and favorable setups in the market on certain stocks. So to find our approach and more information on options trading and all these different things, go to our education section over at schaefersresearch.com to check all that out as well. I'm going to leave it right there for this episode, folks. We will be back next week for another edition of the Schaefer Stock Market Podcast. Again, this was Josh Selway talking to you. Thank you so much for listening, everyone who subscribed. If you could review as well, that'll help the show wherever you are listening. I really appreciate it. I will talk to you all soon.